the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. I'm Chua Tian Tian with Market View. That's where we take a look at how the Singapore stock market closed for the day, the biggest movers, sectors and companies to watch. So let's take you through a quick recap of some key movements for today. While Singapore shares ushered in the new year on a high note, rising at the opening bell today. An early trade, the Straits Times Index climbed 0.2% to 3,793 points after some 56.6 million securities changed hands in the broader market. Now let's take you through the closing numbers. We do see the STI closing above the 3,800 mark, up 0.35% at 3,800.81 points. Now, in terms of value turnover, that's 581 million Sing dollars. Gainers trailed losers, though, 246 versus 284. Top advances for today, we've got here GMHUSD, Jardine Cycle and Carriage, and DBS. And top decliners for today, we've got here SGX, MSC, and New Incorporation USD. Now, in terms of companies to watch, we do have for you Singpost, after the postal services provider appointed former Singapore CEO Neo Su Win as its Group Chief Operating Officer. Now, elsewhere from how Singapore's economy expanded 4% year-on-year in 2024 to how Apple is offering rare discounts of up to 500 yuan on its latest iPhone models in China. We've got more corporate and economic headlines in focus. Also on the list, how a Tesla Cybertruck exploded and burst into flames yesterday outside the entrance of Trump International Hotel in Las Vegas. Now, for more market moves and views, joining me on a Thursday is Terence Wong, CEO of Azure Capital. Terence, welcome back and Happy New Year.
Happy New Year, Tian Tian. Happy to be your first guest for this show.
Great to have you as our first guest for the show. And let's start with the Singapore stock market as usual. Terence, how did the STI fare today? Any surprises when it comes down to the biggest movers? I mean, we ended above that 3,800 mark today.
Yeah, we did. But I look at the numbers. It's a little bit less, it's not as overwhelming as I thought it would be on the first day. I think the market is still trying to track the US. It is kind of correlated to the movement of the futures in the US markets. Dow Jones, S&P 500, NASDAQ futures all rose, but again, not very, very strongly. So, and that comes that really, the stock market over in the US ended off with a whimper in 2024, kind of a weak note, and NASDAQ was, down 4 sessions, and I think that is trying to perk up this today, and our markets are trying to keep track of that. If you ask me about anything that really sticks out, I mean, you have mentioned, the Jardine family, the financials itself, which is driving about half of which accounts for half of our index. That's relatively flat. DBS UOB did well, but then that's all that strength is negated by losses in OCBC. So I look at the heat map, nothing that really standds out in terms of sectors.
Terence, let's zoom in on some of the other companies to watch. Singpost back in focus again. The postal services provider appointed former Singapore CEO Neo Su Win as its Group Chief Operating Officer. How would you read into the appointment, and what will be the top priorities for the COO in helping investors regain confidence in the company? I believe this is a newly crafted role, is it?
I do believe that.
Yeah.
Well, as mentioned last week, there remains to be considerable uncertainty surrounding the situation. Over the past decade, Singpost have really grappled with numerous challenges. But prior to this very recent saga, companies seem to be on good footing. There was some excitement because the board is actually pushing to divest non-core assets. But now analysts, even through this saga, they continue to believe that there is still going to be upside for the company, given that all the initiatives we are looking at of divesting non-core assets, which will bring in a lot of money, that is driven by the board and not the management. In fact, the board has mentioned that the sales process of the Australian business is not going to have an impact. It's not going to be affected by recent developments, and is progressing on as planned. It is still going to seek shareholder approval at the next at the EGM that's being called next month. But all said, because you just mentioned about Neo Soo-in, who was the former Singapore CEO, I think that's still important, given that we did say that with all the hiving off of the non-core assets, there's very little to do with the management, but it's a board issue. But management still needs to come in to run the day-to-day, and Neo Soo-in, who's an insider taking over, that could at least temporarily steady the ship.
A very quick one though, Terence, what do you think will be the key priorities for the COO?
With all these saga, with all the issues that's happening within the company, I'm sure the morale will be down, right? She needs to come in to perk up the morale. That's one, and also the day-to-day running of businesses. I am sure that there are some customers who are unnerved by all the things that's been happening, and with the C-suites stepping down or being fired, not stepping down. So she will have to play a key role in trying to engage all the key constituents of the company.
Okay. And Terence, another company to watch is NIO. Some positive news out of NIO because the Chinese EV maker yesterday announced that it delivered a record of some 72,600 vehicles in the fourth quarter of 2024. Up 45.2% from the previous year. And if we look at the numbers for December, they were at a monthly high. The company delivered some 31,100 vehicles, up 72.9% on the year. How far is this a reason for optimism for investors in NIO?
Well, if you look at the entire EV scene, it is not just NIO that's been seeing very, very good numbers. Of course, there's BYD, which is taking the world by storm, including Singapore. Right, and then there's Li Auto. There are a couple of other Chinese EV makers that have done very well, but that's not taking anything away from NIO. But I feel that this optimism should be checked for a couple of reasons. Number one, for EVs, batteries are important. And NIO do have a fair share of its battery as a service customers, and NIO actually offered one payment waiver for every 3 payments, with up to 15 waivers in December. So we're looking at December, right? So they are giving away goodies, essentially giving away goodies to the customers, or carrots to basically lure them to buy. And as a comparison, so December, remember we mentioned one payment waiver for every 3 payments. But in November, it was only one payment waiver after every 4 payments, and they only get up to 12 waivers. So it's actually a big difference. So that actually, I think, caused the numbers to actually check up. In addition, the improvement in the NIO branded deliveries was also boosted by front loading of demand. Many of the customers that may have bought in January rather than December, they decided to jump the gun and buy in December because they're afraid Chinese government's vehicle trade-in subsidy, and it's up to a princely sum of 20,000 renminbi. That may be reduced or totally eliminated in January or February. So they actually started to buy in before that. So some of it, I think the demand has been one-off. So like I said, investors will probably have to take these into consideration. But these are still very, very good numbers for NIO.
Okay. And let's stay in Singapore, Terence. We do want to take a look at Singapore's economy. It expanded 4% year-on-year in 2024, which is faster than the 1.1% growth recorded in the previous year. And the figure also makes 2024's GDP better than the official forecast of around 3.5% that the Ministry of Trade and Industry narrowed to last November. So how far are the numbers in line with your expectations? Going ahead into 2025, what will be the key drivers of growth for our local economy? Any implications on counters on the local bourse?
Well, the economy has definitely done better than I think most economists would have expected on the street. I think only a handful have thought that we would hit that 4% mark. Looking ahead, you mentioned it's going to be anywhere between 1% and 3% in 2025. That will be lower than the group. That is definitely lower than the growth achieved in 2024. Of course, a lot of things are being said because of uncertainty surrounding Trump. We are very, very trade dependent, and with Trump coming in with the potential or the risk of tariffs, that could actually affect the growth rates around this region, particularly Singapore, because we don't have very much of a domestic market. If you look back at some of the growth drivers, I think will continue to be growth drivers for this year. Manufacturing, trade, finance, insurance sectors were all kind of strong. And in terms of sectors that didn't do well, retail, trade, food and beverage, that's been, I think if one were to read recent reports, you'll notice that many of the F&B companies, from the small hawker store all the way to the Michelin-starred ones, many of them are feeling the pinch. And that's because I guess a lot of locals are traveling out, and there's also a slower recovery in terms of international visitor arrivals. So all these are affecting the F&B sector. And I think that there will be more closures in the next couple of quarters.
Okay, now if you're just tuning in, we're in conversation with Terence Wong, CEO of Azure Capital. Well, Terence, across the region, let's take a look at South Korea. South Korea sharply cut its economic growth forecast for this year, reflecting that fallout from impeached President Yoon Suk-yeol's martial law debacle, and the clouds also hanging over trade-reliant nation from Donald Trump's tariff plans. Now, we know so far that the Bank of Korea's Governor Ri Chang-yong said the pace of monetary policy easing would need to be flexible this year amid heightened political and economic uncertainty. But any thoughts on that?
Well, Tian Tian, you've done a very good job in summarizing the answer already. I think, if you look at South Korea's economy, next year doesn't inspire a lot of confidence. Government has revised down the growth forecast from 2.2% to 1.8%. Not difficult to see why. I mean, you mentioned about disgraced President Yoon Suk-yeol in his cannot imagine why type of scenario where he actually imposed martial law. That's the beginning of the end for him. Now this has led to full-fledged political turmoil. He's being impeached, and all these things will affect the economy as well as business and consumer confidence. Another big issue is, I just mentioned that Singapore was very trade dependent. Guess what? South Korea is too. And if Singapore is going to be affected, South Korea will also be affected quite a bit. And it really depends on how Donald Trump will be. His ascent will actually introduce a lot of uncertainties regarding trade policies. Manufacturing sector, which South Korea is also very, very strong in, that is facing weakness. As you can see from the PMI, it's fallen to below 50. I believe it's something like to the tune of 49 in December. That signals a contraction.
Okay. And further away, Terence, let's talk about Santa Claus. Santa Claus rally didn't appear to really materialize thus far. Adding to that pressure are two things as well. Number one, news of a deadly New Year's Day attack in New Orleans. And also, number two, how a Tesla Cybertruck exploded in flames outside the Trump International Hotel in Las Vegas yesterday. Now, just looking purely from an investing perspective, not speculating about what could have happened or what have happened, Terence, how do you then expect markets and the U.S. to move as investors kickstart the new year today? Are you expecting any substantial movements when we look at Tesla and Trump media as well?
Well, I mentioned right at the top that futures have been on the positive end. So it seems like it's going to start off positive. As with the other two stocks, with Cybertruck, with the explosion, I feel that there will be a knee-jerk. There will be people that will be afraid. Because Cybertruck, after its launch, it has really underperformed expectations. And with this explosion, I think investors would actually do a little bit of sell down. So there's knee-jerk. But Tesla, over the last few years, you've seen them, seen the company, the stock actually go down on knee-jerks and then rise rapidly after that. So that could be something that we will take note of. And then you also mentioned about Trump media. Trump media is more speculative in nature. There's news-driven volatility. So I don't think that the impact will be all that big. In the end, I think investors are still going to go back to fundamentals when it comes to the companies. With Tesla, they're still going to look at the number of vehicles being sold and how it is able to, contend with the competition coming in from the Chinese EVs.
Okay. And finally, before we let you go, Terence, let's bring back the tradition of getting you to buy something every time we talk on air. Let's get you to buy an iPhone right now. Not iPhone from Singapore, but iPhone in China, because Apple is offering rare discounts of up to 500 yuan, around $68 and 50 cents, on its latest iPhone models in China. This, of course, coming on the back of the fact that the US tech giant is trying to defend its market share against rising competition from local players like Huawei. How far can Apple regain market share in China then, looking at the deflationary pressures in the country and how consumers are also tightening their purse strings?
Well, you have a habit of answering all your questions. No, but I think it's tough for Apple to regain market share. Of course, building up from what you mentioned, tightening of belts and all. There's this, since 2018, that geopolitical fight between the U.S. and China, and being patriotic, and also with the government's line and support of local telcos, of local manufacturers like Huawei. I think it's tough for this competition is very, very tough for Apple to manage. And if you look at the recent quarters, Apple has seen a very, very steady decline, but Huawei's numbers have seen substantial gains. Apple's strategy to integrate advanced AI features such as Apple Intelligence into its devices is also complicated by, China's very, very stringent AI regulations and the necessity to comply with local laws that may delay or limit the availability of these features in Chinese market, and that really crimps their potential for better sale. So you're looking at, like I said, tightening of the Chinese consumer. We have very, very stiff competition coming from the Chinese makers, as well as regulatory and technological hurdles. All these things will make it very, very difficult for Apple to regain, their past glory.
Okay. And we shall also see if Terence buys himself an iPhone after this conversation.
Mine's a 12. I think it's about
12?
Time to upgrade. Yeah. How many years is that?
So
that is before Money FM.
Wow.
In 2018, I do believe that.
Wow. Okay. So time for a 16, given the rare discounts. Thanks a lot, Terence, for the insights. As always, that was Terence Wong, CEO of Azure Capital. Thank you so much for joining us on Money FM 89.3.
Thanks, Chua Tian Tian.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.